to look at the high volume in online shopping. Speaking of the Mall of America, it's putting a strain on shipping firms, causing some delays. Amazon is now thinking about reducing its relationship with UPS, a very exclusive billion-dollar relationship. And with me now to break this down is our markets panel, money managers Market Bull, Jason Rotman, and Market Bear, Jonas Max Ferris. So, Jonas, how do you think retailers are going to be taking this development this holiday season?
Well, I think they're ultimately going to get through it. What you're seeing, I believe, is e-commerce is growing faster than our nation's infrastructure, be it airports, roads, trucking. So a company like Amazon is going to grow faster than UPS and will someday need its own infrastructure. You're already seeing that with Amazon trucks going around cities. They're testing out drones. They're predicting a future, essentially, in 10 or 15 years where they're shipping more than UPS could handle or at a speed that UPS can't handle. And that's kind of showing up now with the high volumes that e-commerce is doing versus last year. Some shippers aren't even able to get out stuff on time. Some lesser e-commerce companies are missing deadlines.
Yeah, and that has something to do with the nicer weather that we've been having this season as well. So, Jason, Jet.com, one of the startups that just raised hundreds of millions of dollars, says it now wants to compete with Amazon, but it can't guarantee Christmas delivery. It's kind of a tough start, right?
More than kind of, yeah, absolutely, Jo Ling. I mean, basically, Jet.com, I have no clue how they raised hundreds of millions of dollars. I mean, I really don't even go on Jet.com ever, except for today, just to prepare for this interview. I'm an Amazon Prime member. Jet.com looks like, honestly, kind of just a budget shopping site. It has no customer reviews. How are you going to buy products? Amazon is crushing them on a user-friendliness standpoint. You have thousands of people leaving their reviews on Amazon products. Jet just has the products to buy. Maybe some are cheaper, maybe some are not. And now they're saying we can't guarantee shipment by Christmas. That's as you say, kind of a rough start.
Jonas, I want to take a look at the market as well. We saw some pretty serious triple-digit moves for 9 market days in a row. So much volatility. You can see after that Fed decision, down and up and then down again. And now we're back in the green. How do you assess this very volatile December?
Well, some of it is the Federal Reserve action. It mostly has to do with commodities and how they've been in a big collapse now for a long time, right at the level where you're going to start putting a lot of energy companies out of business and you're going to start seeing defaults in junk bonds. So you saw a lot of collapses in high yield and risky debt. That really accelerated recently, MLPs included, pretty much anything that's a risky credit. And then on the other hand, people are like, wow, these things yield a lot now. The economy must be doing better. The Fed's raising rates, so these are a bargain. You can get high dividend yields now in energy stocks. Some of them aren't speculative. And you're seeing a seesaw back and forth. Is it going to collapse like the real estate crash where there's just huge debt defaults? Or is this a buying opportunity which is kind of a pullback in junk bonds and energy shares? This is most investors think oil's going back to 100. They're probably wrong, but that's what people are kind of waging on.
Jason, what do you think? Where is oil going in January?
Oil, well, listen, I think we're going to see at least probably 41 to 42. I think, right now oil finished, the futures finished in the high 37s. Technically, I think oil will head to 41 to 42. I don't see it finding a home above 50 just because we still have gargantuan amounts of supply on the market.
All right, Jason Rotman and Jonas Max Ferris, thank you both so much. Happy holidays.
You too.